What's up everyone, it's Karthik with MoneyVest. Welcome on board for our Black Friday special here in this market open as we are pushing a little bit higher. So we are seeing a QQQs up over 40 basis points this morning. We got the S&P 500 also jumping higher over 27 basis points with Nvidia essentially flat. We got Google here pushing up another 1.2%, trading back up to 324. And Tesla here is also pushing up over 0.5%, with Bitcoin also trading back up to over $91,000, almost at 92K, and Ethereum also trading back up to over $3,000 as well. So hope you all are doing great and had a fantastic Thanksgiving Thursday yesterday. So we are back at it. It's going to be a shorter trading day because the markets are indeed going to close at 1 p.m. Eastern today. So we're going to have a very, very short trading day, and then we're going to be in it for the long weekend to close out the month of November. Today is the last trading day for the month of November 2025. So if you come over to the market seasonality, we're very close. We are very, very close to close November green, only 40 basis points down. So if the S&P can rally over 40 basis points today, if it can go up over 0.5%, then this would be the 7th month in a row in 2025 so far that we are higher for the month of November as well. That's going to be 7 months in a row. But we'll see. We'll see what happens today. Good morning, everybody. Akash, Patrick, Mike, everybody. Thank you so much for joining. Kathy, good morning. Good morning. Good morning. We are ready to go here. So CME did come down with some halts in trading. So they had a little bit of a disruption due to some data center issues. So trading came to a standstill at the CME on Friday following a cooling issue at one of its data centers impacting traders across the globe. Services were gradually being restored in the US markets as of 8 a.m. Eastern. Bonds and metals resumed trading after a pause, and individual stocks were trading, while individual stocks were indeed trading at the pre-market as well. The CME said futures and options trading would open fully at 8:30 a.m. Eastern, but its foreign exchange spot plus market will remain halted due to some data center issues. So cooling issue at Cyrus 1 data centers. Our markets are currently halted, and support is working to resolve this issue in the near term and will advise clients for pre-open details as soon as they are available. So they had some kind of cooling issue, and their CHI-1 facility experienced a chiller plant failure affecting multiple cooling units, and our engineering teams, along with specialized mechanical contractors, are on-site working to restore full cooling capacity. We have successfully restarted several chillers at limited capacity and have deployed temporary cooling equipment to supplement our permanent systems as well. The AI comeback, all thanks to Google. And of course, Meta considering to buy Google TPUs, or especially leasing Google TPUs to build their own data centers. As a result, Nvidia took a little bit of a slide this past week. So Nvidia for this past week here is down over, well, actually it's flat, but it is down quite significantly this past month by almost 11%. So this is a pretty brutal red month for Nvidia after 6 straight months of gains. It is down almost 11%. So it's most likely that Nvidia is going to close down in the month of November. Tesla's also had a pretty brutal red month. November, 6.5% lower. SoFi in the month of November is also down over 4%. And then if you take a look at Palantir, also down over 17% this month of November 2025 after 7 to 8 months of straight gains. The only stock that is absolutely crushing it right now, of course, by only, I mean only in the Magnificent Seven context and big tech, is Google. Google is phenomenal. It's up over 13.6, pre-market even higher, 1.2%. So most likely it's going to be a 15% for the month of November. So it's actually absolutely crushing it, trading up to over 324. Just take a look at that monthly chart. We've got 3, 6, 8 candles, 8 straight candles of gains for the month for Google here, for the stock Google. Year to date, the stock is now up over 67%. Absolutely incredible momentum coming in for Google. So, good morning, money investors. Thank you so much for joining us this Black Friday morning. And let's just go over some of the questions. Any questions, any comments, just definitely leave them in the chat, and I'm here to go over them as quickly as possible. So let's just go over here. No frowns face. I was just playing. Perfect. Careful for market manipulation today. Again, it's going to be a shorter day, so volumes could be lower. I'll have to try to buy back my CSPs for 90% profit today if they get filled. Yes, Rick, I think that's a better way to go about it. Anything with CSPs, 80 to 90% profit, and I like to lock them in. Hi, Caddy. What do you think about the aggressive AI push in many companies, and what do you think is going to be the impact of AI on people, societies, whole nations, and democracy? So that's a very, very deep and broad question. I know that it's going to impact almost every, aspect of our lives. It's already affecting many parts of our lives. I can't speak for nations and democracies and societies right now because, like I said, it's a pretty loaded question. But from a company standpoint, I think it's getting integrated in every part of the business, regardless of what industry or what sector you belong to. I think AI is just going to be a part of life for a lot of these companies and for individuals, and it's only going to make you more efficient and more lean. And so, to give you a perfect example, the team that I have, right, that's helping me build the MoneyVest platform, they're using cloud. What is it called? CLAUDE, right? So that's cloud or Claude, however you say it. It's helping them kind of code, right, the entire website. It's making them more efficient, and we don't need to get another 2 to 3 more developers. We can get by with just 1 or 2 experienced people that know how to use it and are very efficient in what they do. So that in itself tells you that teams are getting leaner and they are going to get more efficient over time. And so we're going through a bit of an upgrade cycle as a workforce, that everybody needs to have more experience, more skills, more expertise in how to utilize artificial intelligence in order to become more skilled at what you do. And it's all about leveraging this piece of technology to get better at what you already are good at. So I think at the end of the day, like, if people don't shy away from AI, but instead embrace it and learn it and get better at it, that's only going to leverage their skill set to be able to get more opportunities and higher pays. I think that's really what it comes down to. It's just going through a bit of an upgrade cycle for AI. So crypto versus Max 7, again, it's different assets. I would say you cannot, it's not a apples to apple comparison. Both of these have their own pros and cons. So, for a lot of cross asset selection, I've always mentioned that it's never this versus that. A lot of people, like, I've seen a lot of videos, people talk about stocks or real estate, right? Stocks or crypto, real estate or crypto. Everything has its own pros and cons, and you would agree that there's money to be made in every sector or every asset class or every industry. We just have to find the opportunities and find the arbitrage. That's really what it comes down to, because I bet you can name a lot of people that are making money in crypto. You can name a lot of people that are making money in stocks. You can name a lot of people that are making money in options. You can name a lot of people that are making absolute killer gains in real estate. So it's not this or that. It's just finding where those opportunities are, and you can leverage that. So it's a different asset class. Now, if you were to ask me Google or Meta, yes, we can do a pretty good comparison. We can start to kind of look into what are the pros and cons of each company and what's a better opportunity. And that's where, the opportunity cost comes in. But from a cross assets standpoint, it really comes down to your level of expertise, experience, and where you can take advantage of that opportunity and where that arbitrage really is. So that is my quick answer there in crypto versus Magnificent 7. So Oracle's been selling off quite a bit. So we are seeing Oracle absolutely get crushed this past month. It's down almost 22%. Pre-market selling off even more. So very strong support that I have on Oracle is going to be all the way down here, roughly around 180. So on the daily time frame, we bounced off of that level a little bit at 180, 181. So this is a stock which I could see myself maybe selling a put at 180 or lower, and that would be a potential price point to accumulate, or at least start with the process of accumulation, given how oversold it is. And you're also seeing some big institutional investors starting to put money in, as the L3 banker oscillator giving us a yellow spike, as there are some big orders coming in. So 180 is going to be that support to watch for Oracle. Okay, thoughts on GitLab. So let's just take a quick look into this one. So it seems like a lot of consolidation sideways. Looks like we have done some analysis on this, but even on a monthly time frame, seems to be a lot of a consolidation since 2022. So it's been about 4 years. The stock has not really gone anywhere. Instead, traded sideways in that range. We got a pretty strong resistance at $75, and then a very, very, very strong support down at $37, $38. So I would say it's a good potential swing trade. And it's got another support, which I would mark all the way down here at $29, $30. So those are going to be a couple support levels to watch for a nice little swing trade. But fundamentally, it seems to still has some work to do, given that revenues are growing, profitability is non-existent, but it still has a lot of work to do in order to improve its fundamentals and for the charts to actually show us some momentum and some breakouts. Okay, 30% jobs will be taken by AI. So there's a lot of studies, a lot of different analysis done by different institutions that are telling us that, yes, a lot of the workforce is going to get replaced by AI. But I think it's going to be, like I said, a bit of an upgrade cycle that we're going to go through. Do you think all this bad news daily will for Nvidia continue to hurt it? Every day I see a red headline about something negative. When will sentiment shake these headlines off and have it go up? So the thing is, well, by the way, Mark, thank you so much for the gifts that you are sending to the MoneyVest members. We really appreciate it. And yeah, thank you so much, man. I really, really appreciate that. So with regards to Nvidia, what you'll notice is that it's still very close to all-time highs. I mean, it's obviously had a pretty bad month, but all in all, I mean, it's down, 15%? Yeah, from its all-time high. So it's in a bit of a correction, yes. But it was already, pretty overextended and overbought, and valuation was getting up there. So yes, there is some negative headlines coming in, and that's causing a bit of pain for Nvidia. It's struggling to break above 182, 184, but I do think that Nvidia over the long term is the story remains intact. Is it priced for perfection? Sure. Is it a little bit more of a premium valuation? Possibly. But the market is large and growing, and Nvidia is still the front leader in the artificial intelligence space. So I have no doubt that Nvidia is going to be a very successful company. It's just a question of how much more upside does it really have from here. And as I've mentioned before, I mean, it's already at a $5 trillion market cap company, or at least it was. Now it's down to 4.4. How much more upside does Nvidia really have? So from an opportunity cost standpoint, I would be very confident putting my money into something like, let's say, SoFi, than I would at Nvidia. So I've essentially not been buying Nvidia at all. Like whatever I have, I just own it and keep it. I'm not putting more money into it because, as I said, from 5 trillion for Nvidia to double and give me another 100% return, it has to go from 5 trillion to $10 trillion, whereas SoFi would only need to go from like 30, 40 billion, whatever the market cap is now, to 50, 60 billion, right? So right now the market cap for SoFi is 34 billion. It would only have to go to 70 billion, right? It's not a ton of momentum and money, right? So it's a lot easier for smaller companies to obviously give you those higher returns as opposed to these big established mature companies to give you those returns because of just the size and scale that these companies are trading at. But then again, the probability of success for these larger companies, for big tech, is higher than smaller mid-cap companies because for every one Palantir and Nvidia and Tesla, there's hundreds and hundreds of small and mid-caps that don't make it. So we have to be very selective and very precise in what we put our money into. That's why a lot of due diligence goes into stock selection and doing a lot of research on what we want to put money into. So their CDFS are high. That's what worries people. And if they can generate as much revenue as they promise once their data centers are built, if demand isn't met, it will be horrible. Yeah, so that's one of the biggest risks for hyperscalers in general, for everybody, because if the supply kind of strips out the demand, eventually prices will of course come down, and then we will continue to see a little bit of a recalibration of this market. In other words, the markets will start to find an equilibrium for where these prices are valid. Right now, what we went through in 2025 was, of course, a lot of promises, a lot of investments being announced, a lot of pledges being made, a lot of promises, and a lot of collaborations between companies. And that's really what the market is trying to price in. So, Between qualitative and quantitative analysis, what happens? Okay, you tell me what moves faster. If you were to look at a company, let's say, Palantir, for example, what is going to move faster? Is it the qualitative analysis, in other words, the story, or is it the quantitative analysis, in other words, the numbers? So in our fundamental analysis course, I break this down that there are two ways you can analyze a stock, right? You can look at it from a qualitative perspective, which is all the intangibles, things that you can't really analyze or quantify. These are all about the story of the company, the management, the brand, how people feel about the company. So those are all things that you can't quantify. It's all about the story and the qualitative analysis. The quantitative analysis is all about the numbers, the actual financial statements, the revenues, the cash flows, the numbers you can actually measure and calculate and analyze. So with every piece of news that comes out, right, what moves faster? Is it the qualitative analysis or is it the quantitative analysis? So it's a very simple question for all of you on this Black Friday. Let me know what you think is that moves faster for a company, right? When the news hits, what is it that people analyze or try to analyze very, very quickly? Is it the qualitative or the quantitative? Okay, Lamb says, with Palantir, I'd say it's both, but quantitative. Okay, I'm just gonna wait for a few more answers here. So, hype analysis moves the market fastest. Okay, fair enough. Just gonna wait for a few more answers. Definitely participate in the Q&A if you want to take a guess, or if you want to definitely share your answer. So qualitative, Mike says qualitative, people go with emotion. So 100%, qualitative moves first because that's the story piece, right? So that's what people are trying to envision about the company, right? So if somebody's partnering with someone else, the story hits first. That's the qualitative analysis, the story of the company, right? And the quantitative analysis is later. That's the numbers piece. And the numbers are only reported 4 times a year, which you can actually see in the quarterly earnings. So qualitative moves first, quantitative moves second, which is the actual numbers, because at the end of the day, as I've mentioned before many times, everything is going to drip down to the actual numbers. Whatever we think about any company and its potential is eventually going to translate into the numbers. If we believe that Tesla's robotics division is going to be the biggest ever, it's going to show us that eventually in the numbers. If not, the numbers will show that, right? So numbers never lie. The data never lies. And that's exactly why qualitatives moves first, because that's built on people's emotions and stories and perceptions. And the quantitatives moves after, because that's the actual numbers. Now, the arbitrage or the opportunity comes in when emotions and perspectives and the sentiment of people about that company is higher or lower than what the actual numbers would be in the future. So if people are not pricing in the potential of that qualitative analysis and what it could be for the numbers in the future, that's an opportunity. If people are overpricing already, overcompensating for the story and the collaboration, whatever is being reported, then the actual reality, then that's your call to stay away from it, because it's a little bit of a hyped up stock. So at the end of the day, like, it's all going to come down to numbers, right? So as Tazel Hammett says, without numbers, there is no business, 100%. And at the end of the day, like, as we've talked about it, hype dies, data survives, right? So the hype will eventually be very cyclical. It will go up and down and all over the place. Some days investors are feeling bullish and euphoric and greedy, and some days they're feeling negative and pessimistic, and they want to get rid of those stocks. And, Warren Buffett tells you, like, markets mood swings are pretty wild and they're pretty rapid, but the numbers will always tell you the full story. And so that's why we put a lot of weight into the valuation and the numbers of any company. Okay, so that was a quick chit chat there. CELH, please, is a good time to buy. So Celsius has, I think it's been selling off quite aggressively here. So on the weekly time frame, pretty brutal sell off there. On the earnings week, down over 31%. And now you'll notice that it is sitting at roughly around this support at $38, $39. So that right there is going to be that level of support resistance all the way up to as much as $65, $66 per share. So it is pretty oversold right now. So we're certainly pretty oversold at the moment. Just give me 1 second, you guys. Sorry, just 1 second. So yes, here we go. All right, what's your 1 year outlook on Nvidia? Analysts have projections as high as 350 a share, most around 250. I own a lot of it, and I'm a long-term investor just considering rebalancing in 2026. So I have a considerable position in Nvidia as well. As you know, that in the options portfolio, it's a pretty big size in terms of the percentage allocation. Now, when it comes to the 1 year targets, it's hard to say. Like, what I can tell you is that, okay, if we are looking at Nvidia's earnings for the next year at around $7.54, right? $7.54, and right now Nvidia trades at a PE multiple of around 44 on a trailing basis. Forward multiple is going to be a lot lower, but if you're looking at $7.54 and we apply, a P multiple which is trading at right now at 44, we get a price target of 330, which is insane, right? It's going to be almost double than where we're trading. But if you look at 754 and we apply, let's say, a price earnings multiple of 30, now we're looking at 226, right, as a potential price target. We're looking at 30 times earnings on a forward basis, which I think is very reasonable, because if you consider where earnings are for this year for Nvidia, they're going to do around 467, right? So 2026, 754, the year after 950. So that's a pretty substantial jump, right? So if you do the calculation, 754 divided by 467, we're getting a 61% jump in year-over-year earnings. And then 2027, we're looking at 950, right? So 950, divide that by 754, we're looking at 26% growth in earnings, right? So 26% in 2027 prior to 2026 year. So if you look at 754 and give them I think 30 times multiple is very reasonable. We would come to a price target of 226. 226 would mean from here, it would break out to new all-time highs, and we'd be sitting at a 26% upside from here. But as you guys know, that I don't like to make any predictions like these. I don't like to put price targets, because it's just not useful. It's just not a good use of our time. I would much rather tell you where the fair value is and where the risk reward is extremely attractive, as opposed to tell you where I think Nvidia stock is going to go. Because at the end of the day, like, where it's going to go and our prediction on where it's going to be is just fairy tale. Nobody has any clue. Literally, nobody can put any certainty on their predictions, because a lot of these valuation models, and I know, like, I run them all the time, right? I'm spreadsheets everywhere. Like, this is what I do every day, is even if you change the smallest inputs, it can change the outputs dramatically. Even the smallest changes in your input for growth, for multiples, for margin of safety can wildly swing your outputs. And so a lot of these models, especially when you're looking at forecasting models and price target models, tend to become a lot less relevant because they've got less certainty. With fair values, especially a conservatively run fair value of a stock, like if the growth forecast is 30% and you're applying a 20% rate or an 18% rate, so you're going a lot lower, and then you're applying a margin of safety, and then you're applying a conservative multiple, even lower than where it's trading now or where the analysts are forecasting it's going to be trading in the future. So you're kind of knocking down on those points. You're like, okay, what's a very highly probable, conservatively realistic expectations, and then discounting it back to fair value? That is, in my opinion, a much better approach. Like, okay, that's the fair value. If it's trading below that level, it makes for a fantastic deal that I don't want to pass up on, as opposed to like trying to predict where the stock is going to go. Because at the end of the day, like, nobody really has any clue. Nobody in the world could tell you, me, or anybody else where stocks are going to go next day, the day after, like the week after, the month after, the year after. Nobody. And that's why, you'll never find Warren Buffett, Peter Lynch, Howard Marks never come on CNBC and make a prediction about the market, because they know, like, this is not the game that they're playing. As I've always said, the greatest investors of our time know what they know, and they also know what they don't know. It's so important to also know what you don't know, because if you don't, then that can be disastrous, just as disastrous as making a mistake. All right, so coming back to the questions here. So Celsius, we broke down HIM's back to 50 in a near future. So let's take a quick look here. Well, we're showing signs of some progress here. We got a big resistance to capture at $41. So this right here is going to be that resistance level to watch. And a breakout above this, we're going to be looking at next target up to $48. So that is going to be another resistance level to watch. Thoughts on AMD in comparison. So I think both Nvidia and AMD have bright futures. As I've said, I'm very bullish on semiconductors as a sector whole. And as a result, SMH is always going to be my top pick for an ETF. If you're looking for some serious growth, you're looking for a sector that has a very strong future long term, is going to continue to do well, in my opinion, SMH is the one certainly to consider. Similar to VUG, like there's only two ETFs that I own, VUG and SMH. That's it. That's all I have, right, in terms of ETFs and index funds. And the plan is to continue to dollar cost average and just not look back. Don't worry about the volatility. Don't worry about all the cyclicality that comes with the market. Just close your eyes, and those two ETFs, I'm just like putting money in. I have to dollar cost average more. I haven't done so in a while, but that's been the plan. It's just those two. I'm going to keep dollar cost averaging and buying. Palantir we covered earlier a little bit, but we'll take a look at it once more. Qualitative analysis would have to do with analyzing quality of the company, 100%. It has to do with things that you can quantify, right? These are all things that you cannot quantify. So the two disciplines that we focus on, qualitative and quantitative, of course, the name speaks for itself. But if I ask you today, how good or bad is the brand of Apple, right? As an investor, if you're analyzing Apple, and I ask you, like, do you like Apple, right? Do you like their products? How is the brand Apple? There's no number you can give me. You cannot quantify that answer, right? You cannot tell me, oh, Apple's brand is 7, or, my feeling towards Apple's products is 9. Like, sure, you can try to quantify it, but there's no global scale where you can quantify those measures. So it's all intangible. It's all like, based on qualitative analysis, like feelings and sentiment. So that's the story part. And then you can obviously analyze the quantitative analysis, like the numbers, all those things. So once you combine those two things, that's what makes the whole story and the thesis of the company, of the story, right? Of the business. So how do you feel about Rubric as a cybersecurity play? It has not been loved by this market. Let's just take a quick look here. So I know Vault was also asking about Rubric, I think, earlier. It's been selling off aggressively. Yep, it's not been loved. Volume's been pretty dead on this stock. I mean, there's such little volume, and we've seen certain spikes around earnings. It gets a bit of a burst, but overall, I think it's just been lower high, lower lows. It's been getting crushed in this market. So I would say $63, $64 is going to be that support level to watch. Losses seems to be expanding higher, although quarter over quarter margins are improving. Revenues are also increasing. Profitability-wise, we're not looking until 2027. So, that's another thing, is that institutional involvement is only at high scale when the companies actually turn the corner towards profitability, right? Think about Palantir. Palantir, Tesla are some of the biggest case studies that every investor needs to study their progression. Because if you take a look at how many hedge funds and how many institutional investors owned Tesla and Palantir 4 years ago, was significantly less, right? Significantly less. Big part of that reason was the S&P 500 inclusion. And why are these companies included? Because of the profitability, because of the turning the corner, because of operating leverage, and all the things that they did right along the way. And it's not until after big money steps in is when that starts moving the stock, right? Retail doesn't move stocks. It's only big money that can actually move companies, right? Can move prices. Because it's a volume game, and big money, i.e. institutional investors, hedge funds, they're the big guys. And once they start entering in, you can see the volume, you can see the movement on that stock. And so for any company that's not profitable, that's one of the things that is lacking, because a lot of these funds, they do have criterias, and profitability is at the top of their list because they have to share with their investors what they're buying, what they're selling, what they're investing in. And oftentimes, if the company's not profitable, they decide to kind of, refrain from investing in them. Or they will have like a very small position. So 2027, 2028 is really where I could see like Rubric kind of, picking up a lot, as those, as it's turning the corner post 2026 towards profitability. So keep a close eye on this. There's a lot of companies, by the way, with this type of profile where 2026, 2027 is when they are turning the corner. And so we'll look into those towards the end of this year, early next year, to keep an eye out. But 63, 64 bucks is going to be that support level to watch for Rubric. Okay, I know you don't talk about politics. Is there anything to be worried about with the U.S. and Venezuela rising tensions with the markets? Hoping it won't, as we are trying to end the war with Ukraine and Russia as well. Again, I'm not gonna be the best person in this subject topic. I know Dave and I were talking about this very briefly on Instagram. He sent me something that the U.S. is of course preparing to attack Venezuela, or at least try to send people there. But as I said, I wouldn't be the best person on that topic. Can you do an analysis on Meta and AMD? AMD, so we briefly went over. Happy Thanksgiving to you too. Looking at Meta platforms, it is on my buy list for now. It came down to our light buy perfectly, sub 590. I know a lot of people picked it up in the 580s and 590s that are now up. It's now fighting up that resistance at 633, 635, all the way up to 659, 660. And our support level is still going to stay put at 580 bucks. So that is going to be that level. Kagna, no, I'm coming to your question. It's not that I only reply to a few select. I'm replying to every single chat. I haven't gotten to your question yet. I'm coming down to it. Give me a couple minutes. Any thoughts on nuclear power stocks, Oklo and SMR? So let's just take a very quick look here. All right, so fundamentally speaking, again, you want to be very careful with a lot of these names, as you can clearly see losses after losses, and a lot of the quantum computing, nuclear, a lot of these brand new ideas, as I've said this before, if you believe that this could be big, which is fair, if you've done the analysis and you've done the research and you feel like, okay, this could be big, start small. Always start small, right? You can always scale into your position as your conviction grows, but it can be disastrous if you start big and then you're having to unwind that position if it doesn't work out. So as I've always said, I'm more than happy to be conservative and right than be aggressive and wrong. You don't want to be aggressive and wrong. If you're conservative and right, that's still good. If you're aggressive and right, that's great, but you want to start with conservative starter positions, and you want to scale into those as time goes on, as your conviction builds. So for Oklo, pretty oversold here. As you can see, the RSI MACD coming down. Support level is going to stay put at $84, $85. And then SMR, I'm assuming, is going to be very similar profitability-wise. There's not much to write home about. Support level is going to stay for $14, $15 for SMR. Okay, coming down. Thank you. You're awesome. Thank you so much. You explained things very well. Perfect. Do you use Bollinger Bands? Thomas, not necessarily. I don't. I like to keep my technical analysis super simple. And that's also in the technical analysis course that I have, is you'll see me primarily just talk about the price action, and you kind of run the full circle. I think this is what I've realized with a lot of technical analysis, is that in the beginning, we're all very excited to learn. And I remember 10 years ago, and I was like super excited learning about technical analysis, and I had like 15 different indicators, like all these different things. But then over time, you start to realize how much of noise that creates. You start to have this analysis paralysis where every indicator is going to be telling you different things, and you're not able to make a decision, right? You're having that fatigue. And so over time, you start cutting out on the indicators that are not worth it. And then eventually, it just comes down to a naked chart. For me, this is the best way to analyze, is simply looking at the price action. There's nothing better than looking at price action and volume. That alone will tell you so much more than any other indicator could. So understanding support, resistance, the candlesticks, and the price action and the volume is, in my opinion, significantly better. So as Kevin says, yeah, less is more, 100%. In technical analysis, less is definitely more and better because you don't want to be confused by having 10 different indicators on your chart. So okay, Broadcom, how far out for cover call? So it depends, Ray, what your cost basis is and what your objective is. I'm more than happy to look into the options chain for you, but definitely need more information on that. So, Kangna, coming to your question now, BMNR. So let's take a look at BMNR and Palantir to cover some questions here very quickly. And let's take a look. BMNR, I think last time I checked, is pushing higher pre-market, so it's up almost 5%. Thanks to Bitcoin and Ether pushing higher a little bit. But again, this is a crypto name, right? So Bitmain is going to be trading off the back of Ethereum. And as Ethereum is trading back higher, back up to over $3,000, so is BMNR. And the next resistance for BMNR is going to be $39.40. But again, largely dependent on where Ethereum trades. Support level is going to stay up roughly at $30. Palantir, on the other hand, continues to trade inside this downtrending channel. So we are in this lower high and lower low pattern. Resistance all the way up to 170s. So that's the next level to watch, and support level roughly at 161 for Palantir. Okay. As a data analyst, every day I can tell you data always wins, and the people who don't like the facts disagree and lose. 100%. Data will always win over the long term. So I agree with you. Rubric is a good one to ask about. They partner with many big names. Yep, so we covered that earlier. Can you predict SPY? I can't, Lise. We don't make predictions here. How to make money either both about your Palantir. Looked at it there. I can't understand what you're saying, Conan. If you can maybe ask that question again, I'll be able to help you better. Is there any stocks that mean to hold it for forever? So the vol, I don't think, for individual stocks, there's anything that you can consider buy and forget forever, because individual stocks they have their own life cycle, right? Every business goes through a cycle of growth and then maturity and then hopefully no decline and then stable growth. But they always need to be reanalyzed. There is no company out there that I would argue is a buy and hold forever, because things change. Things change, right? The world is changing constantly. Every day we're changing. And so if the management that comes in, the succession plan, whoever's managing the company, as Warren Buffett says, right? You want to buy companies as great as possible that even a foolish person can run that company, because eventually one will. And there's truth in that quote, because eventually one will, right? If you're investing in a company that's going to be around for 20, 30, 40, 50 years, it's going to go through multiple cycles of reorganization. And in order to stay at the very top, it's challenging, especially in a market like the US where capitalism is just so cutthroat. You've got technology evolving at such fast pace. I mean, Palantir, like 5 years ago, it wasn't even on the map, right? Of course, we were talking about it, but from a market cap, from a scalability, from an actual impact standpoint, it was nowhere. Now it's a $500 billion business on pace to getting up to $1 trillion in market cap, with revenues sitting well over 3 billion, possibly getting up to 4, 5, 10 billion in the future. So that's how fast these businesses are growing. So if things are changing so quickly, there's no one stock that right now, without knowing the future, you can be like, yeah, this is a buy and hold forever, because every company needs to be analyzed every quarter on its own merits and whether it has the power to stay at the very top or it's getting complacent and it's starting to get comfortable. Of course, there's a lot of examples like that. Cisco, Intel, a lot of companies became complacent and now they're nowhere to be found, right? They're just selling off. So yeah, there's no, as I said, buy and hold forever kind of name. If you're investing in individual stocks, it does require your active participation. Otherwise it could be pretty scary. Okay, all right, we covered that. Does SYM look like a decent momentum trade with a gap and go after earnings? So Symbolic, I think we've covered that before as well. Let's just take a quick look. Okay, so we do have a pretty big gap to fill in on the downside. Last couple of days, very strong momentum coming in. I would put up a support right here at $82, $83. So that's going to be a support level to watch on the day. And then a huge gap that, of course, we have left here. Another support down to as much as $64, $65 there. Conan, less money is more money. Yeah, no, that's not what we're talking about, buddy. We're talking about technical analysis. We're talking about the analysis that you're doing. Less is more. The less trades you make, the more money you're going to end up making. There's a lot of truth in that, because the more trades you make, the more you're going to screw up. It's all about making less decisions, but higher quality decisions, as opposed to making too many decisions and having that decision fatigue. Okay. All right. So 6 more minutes until market opens here. And we are ready to go for this shorter Black Friday trading day here. Hope you all are ready. And you have a chasing voice. What does that mean? Chasing voice. Doesn't sound good. I don't know what that means, but it doesn't sound positive. It sounds like negative comment. Anyway, thank you. I appreciate that. Can we trust this rally? So we are almost, on the verge of a bit of a breakout. So S&P 500 is already starting to break above this downtrending channel. If you break above 68.70, I would say that yes, we're getting some pretty serious confirmation that, we're breaking out from this downtrend. And then for the NASDAQ as well, we're starting to already break above this downtrend, already sitting above that support. So if you break above 23.5, then I would say we are on our way to potentially getting up to all-time highs. So they're both trading above the moving averages, which is a huge sign of the bulls recapturing that momentum. And we're also showing signs of a breakout above this downtrending channel. So all in all, it looks very good from the technical perspective. Yep, SanDisk, we were covering that earlier as well. Absolutely insane performance from this company, right? So up another 3.7%. This stock has been on an absolute rip over the last few months, from its lows of $39.40, 580, almost 600% gains. And then the resistance at all-time highs, sitting roughly at 284, 285 for SanDisk. Oh, echoing voice. Oh, okay. Do you think there's a market for Tesla cars and or power in India? 100%. Absolutely, 100%. But there's a lot of challenges, right? I mean, with the import duty taxes, manufacturing, the EV infrastructure, the overall landscape, it's going to take a long time. But given that India is a very price-sensitive market, and as a consumer perspective, we look for the cheaper, most efficient, and the best options, Tesla, if ever got into the Indian market and they found a way to produce a car at around $25,000, every single automaker will be done on that day. Tesla will have a complete sweep of market share if they're able to bring that level of technology at that price. I'm talking about on the road price, right? So if they're able to somehow manufacture and just build and sell within India, it'll be a game over. Plus with the ongoing electric vehicle charging, which is next to nothing, I mean, it will be just game over for, I think, most auto manufacturers. Yeah, volatility is back down 17.5. Here we are. Got down from 29.30 back to 17.18 here. So that's where we are here. So a couple more minutes for this Black Friday markets to open. Kevin, you saying Indians are cheap? Cheap as heck, including myself. We don't like to overpay. We always like to haggle and negotiate, man. It's in our blood. I guess most, I can't speak for all Asians, but yeah, definitely India. That's just how we were brought up, And what are you talking about, Kevin? You collect coupons all the time. You're looking for coupons where I can get a good deal. You're always looking for discounts. Don't tell me you're not looking for deals and discounts all the time. That's what we do in the markets everywhere. It's not about the money, it's about getting a good deal. So it doesn't matter if you're buying a house, a car, investing in stocks, investing wherever, buying groceries, we want a good deal. We only feel good when we get a good deal. That's all it is. It has nothing to do with the money. It has nothing to do with the price, as long as I'm getting a good deal. Yep, Indians are the same. We need to learn that. I agree. As an Indian, it's in the blood, 100%. So, because yeah, that's all it's all about, right? So buy low, sell high. It's ingrained in our system. All right, everyone. 30 more seconds left. What are we thinking? Green November or red November? Are we going to break this streak? 40 basis points. It comes down to the last day, the last few hours, because it's a short trading day here. 1 p.m. markets are going to close. We only have 3.5 hours for this market to turn things around for the month of November. 40 basis points is all we have to cover ground in order to close green for the month of November. But if we don't, we will break that streak for 6 months here. Karthik, will the new MoneyVest app have real-time prices and charts, some indicators, example, volume weighted? So we're going to add the technical pieces after the launch, because now we're going to move back to the features and the new models and things like that. But it's going to have real-time prices, obviously, and it's going to have the web and the mobile version. But technical analysis, we're going to add over time, not right now. So markets are open, everybody. Happy Black Friday. Happy Thanksgiving. Hope you all had a great Turkey Day yesterday for everyone who's celebrating. And QQQ's opening up 28 basis points. S&P up over 18 basis points here. Got Nvidia down about 80 basis points right now. And Tesla pushing back up to almost 430, up over 60 basis points at the moment. Volatility is back down in the 17s as a lot of individual stocks are pulling back. They're kind of a mixed open. Some are up, some are down. And then volatility and Ethereum also back over 3,000. Bitcoin's back over 92,000 at the moment. So thank you so much for joining, everybody. Hope you all have a fantastic long weekend. And again, super grateful, blessed, and thankful for all of you, for our community. Link's going to be down below if you're interested in joining. There is, again, a 40% annual discount. Any Black Friday deals recommended go green? Yeah, so there's going to be a lack of deals right now. I think Meta is the only one that is going to be close to the buy target right now, and then Technoglass, and then just a few other names. Like I think Fortinet, Jack is also trading in and around the fair values or the light buys. So again, link's going to be down below if you're interested in joining for just today, the Black Friday sale, 40% off. And then, of course, individual courses are going to be 60 to 70% off if you want to take advantage of that as well. As always, have a great weekend. Happy investing. I'll see you all in the